Welcome. My name is Len Lane, and I am the founder and president of Brokers for Life, Inc., and we are Dominion Lending Centers in Western Canada. The topic of our podcast will be about what we consider to be real-life mortgage solutions. Welcome back. Over the last couple of episodes, we've been talking about insurance. We've talked about mortgage default insurance with Sagen. We've talked about title insurance with FCT, First Canadian Title. And today we're going to talk about the most important one, I think, of all three, life and disability insurance. Our main provider, our only provider, is a mortgage protection plan through Manulife. And today my guest is Kyra Wong, Senior Vice President, Insurance Products for DLCG.
Yay!
Welcome.
Thank you.
Maybe give us a little background on your experience in the industry.
In the industry? Well, I started off as a mortgage broker, actually. Joined insurance. It's about 20 years ago, but I had a personal experience as a mortgage broker with something happening to one of my clients that really turned my head around about the way I was offering it and, leveling up my own way of offering insurance to clients. So I learned through the school of hard knocks, and that's part of the reason I'm passionate about helping educate mortgage brokers today.
Excellent. So let's dive right in, I guess. Mortgage protection plan compared to bank insurance. How's that for a starter?
Yeah, well, there's no comparison. And of course, you knew I was going to say that. It's actually really a tragedy that, the banks are really our biggest competitor out there, and yet they offer non-portable insurance products, which mean that if a client takes the insurance from the bank or their lender, they can never take the insurance with them in the future. It's not portable. So if they have a health issue come up, they would have to, basically if they became uninsurable, they're stuck there at the bank because that means they would never be able to get new coverage, down the road. Or even if they don't have a health issue come up, if they wanted to move lenders in the future to take advantage of better interest rates, they would have to cancel their insurance and reapply. And as people get older, insurance gets more expensive. So it's a real travesty that people, don't know that. And it's a deliberate retention tool that the banks and the lenders use to try and lock down clients to them forever and ever and ever.
No question that the portability we've actually lost deals recently, was because the bank rate didn't change and he didn't want to lose that coverage because the new coverage, of course, was going to be more money, right? So important point. So I know the bank penetration on mortgage and life and disability insurance is huge. I talk to former bank agents on a regular basis. And they're sometimes in that 50 to 60% range of penetration, which is huge, right? I keep telling them if they were doing that here, they wouldn't have to worry about mortgages. They could just do insurance. So why do you think that is? Our rate, our overall personal rate at the company here is about 23, 24% maybe.
Yeah, so at the banks, they basically recommend the coverage and they assume the sale. Like the starting point is basically, you need this, you need to take this. This is very important. And so they don't bias the client against the insurance, right? I think with mortgage brokers, they have the best intentions at heart. And they'll say things like, oh, you should go talk to a life insurance agent or you should go talk to a financial planner. And that isn't wrong. They should. But what I know from 20 years experience is that a lot of people will never get around to doing that or doing that in a timely fashion, right? So if they get the coverage right at the point when they're getting their mortgage, they have it walking out the door, which is awesome. And that way, if they never get around to getting other types of coverage or getting a financial plan, at least they're not going to lose their home, right? So I think banks know that clients are probably not going to go out there and shop around or do it right away or get a will for that matter. So many people don't even bother getting a will. It's another huge disaster when you're not doing that. So they assume and they roll the premium into the whole payment up front, right? So they're not sort of tacking on this extra charge right at the very end. They sort of speak of a protected payment with principal, interest, taxes, and insurance. This is what your payment is going to be, right? So clients have that in their mind from the get-go and are comfortable with it from the get-go.
Yeah, it definitely makes the difference. I think that the way it's presented is monumental different between what we do. And I think, of course, we're going to talk more about pro tips in the end, and we can kind of go through that some more at that point. Our payment plan, I know, is way bigger than the banks. I believe we're 9 times monthly payment and no clawback after 90 days. Every time I say no clawback after 90 days, they go like, what? So how do you think that program came about?
That's a good question. I'm not sure how they extracted that exact number, but it is very lucrative, right? And I mean, I think the national average premium now, it used to be $85, but as time goes by and real estate gets more expensive and mortgages get bigger, I think the national average premium now is about $122. And so times that by 9, right? And then you can easily make over $1,000 per file just on the insurance. And if you're not making that as a mortgage broker, the banks and the lenders are more than happy to make that on your behalf and lock your clients down in the process.
Yeah. And that's funny because we see that at the lawyers even, right? Where the lawyer has been sent a insurance document to present to the clients as well. I'm sure they just go, here it is, yes or no, and move on from there. But if it's at the bank, probably 30% of our business is to the banks itself, and the rest is to the monolines. But yeah, they're all there looking for that opportunity to sell that client that life and disability for sure. So you do some different things at DLC. We offer an exclusive trip. I've never made it, but Cheryl has made it many more times than I can count.
Yeah.
So maybe talk a little bit about the rewards of actually representing MPP or presenting MPP.
Yeah, so the top performers trip happens every year, and it's just a way to recognize people who go above and beyond doing, what's best for their clients, making sure they get protected. But even more importantly, it's proven, the more customer transactions you do, the more you build a fence around those clients, right? And so if you do the mortgage, if you do the insurance, you're more likely to retain that client in the future, which protects the longevity of your business cycle first and foremost. So this is bigger than just selling insurance. And so the trip is just to really recognize those brokers who approach their business not like it's a transaction, but really a business, right? And with, the hope of having a long business cycle with all of your clients.
Lots of different advantages, obviously, to doing this. Can we talk maybe about, I know there's a lot of different ways that are presented. In our own case, I've always implemented or suggested that there's a clause you need to send. And that basically says that we're required by law in the province of Alberta to offer you life and disability on your insurance. Regardless of your decision, we need this form completed and sent back to us, right? I'm actually the only one licensed to sell insurance as the broker, right? What's a better way to maybe go about that for our clients? Of course, the other part now that's happening is the links to MPP through Velocity have made a big difference, I guess, or a different way to present it. But what are some of the pro tips that we should talk about?
Pro tips. So obviously speaking about insurance early on in the conversation, like I think right at the credit application stage when you're gathering information from your clients, that's a really good point to say, oh, and by the way, do you have life insurance? And if you do, how much coverage do you have? Like, what does that look like, right? So for example, if someone's got a $250,000 term policy and you're putting them into a $500,000 mortgage, well, now there's a protection gap, right? So then this is less about a shot in the dark about whether someone needs, insurance or not, but you can speak more intelligently about where the pitfalls are or where the protection gaps are if you've gathered some information up front.
So in our Velocity applications now, there is that question. And do you have coverage? And do you know how much? And sort of.
And it also asks
is
about, yes, it asks about work coverage too. Like, do you have benefits at work? Sometimes people say, oh, I don't need insurance. I have, coverage at work. But people don't realize how skimpy that actually is if you're in a situation you have to rely on it. And if you just think about this logically for a minute, employers are in the business of getting employees back to work as soon as possible. So they're not going to be giving you these robust, benefits plans to make sure that you're comfy on the sofa, binge watching Netflix and eating Cheetos. No, they're going to make it financially pinchy for you so that you're going to get back to work as soon as possible. And within our own statistics, we see over 56% of people go back to work before they're even fully healed because they are feeling financial duress, right? They're feeling so financially pinched and squeezed, they go back to work before they're even ready.
Yeah, and we have lots of examples of that. One of my young clients in Fort McMurray making a lot of money as a bodyman, probably 175,000 a year. That's doing on the Athabasca River. Hit a sand dune under the sand, flipped about 30 feet through the air and broke his hip. Now he's less than 30 years old, so breaking a hip is not something you really think about. But, of course, the first call is to me, did I take the coverage on our mortgages? And they had two. And, of course, the answer was no. But what happened is he was the prime example of the coverage from work was only 65% of what his base salary was, not the tons of overtime he was working, right? So those are always big examples there.
That's a great point because it doesn't factor in overtime. It doesn't factor in, bonus and all that. It's your base salary. So it's usually pretty skinny, and that's done deliberately because employers want you to get back to work as soon as possible. And don't forget, too, when you get disabled, for example, there are costs associated to getting well. So you need money for that. So if you have your mortgage payment, which is what's most people's biggest, largest financial debt every month, if you have that being covered by MPP, for example, you could use your work benefits, all of them, for everything else. There's no offsetting to that whatsoever. So it's a really good idea to have your mortgage payment covered separately.
What are, you talk about starting the conversation early. What other part of the presentation, I guess, is important or a better way to do it maybe than what most people do it?
So some of our top performers, what they do, and listen, with insurance, it really just comes down to confidence and how much you believe in the product. If you don't believe in the product or that clients need it, or if it's important, then you're not going to do a good job, conveying that to your clients. The brokers who do the best, oftentimes they have personal stories of things that have happened to them, or they've had something that's happened to a client, and it makes them very passionate about it, right? So for my example, when I was working as a mortgage broker, I had clients that were purchasing a home in Chatham, Ontario at the time. And the husband died of a massive heart attack 10 days prior to the funding date. And the wife had no ability to qualify for that mortgage on her own. So, of course, she's gone to the vendor and says, this is what's happened. But that vendor was also purchasing a property and said, well, too bad, you have to close on this. And if you don't, I'm going to sue you, right? It's like, oh my goodness, right? So this is now you've just lost your husband. Now you've got this lawsuit going to hang over you if you don't complete. And how do you complete now when you don't qualify for on your own? So this is the sort of thing, and people don't realize that. So when you can share stories, I used to say to every single one of my clients after that incident, this is what happened to my clients. I am not going to let this happen to you. You are taking this today, and I'm going to do a check-in on you. There's a 60-day money-back guarantee. I'm going to do a check-in on you at 30 days to see if you've got any other coverage in place. And, 9 times out of 10, no, they hadn't, right? Because they, moved into the house. They're busy with all the things, and people just don't get around to doing those things that don't spark joy, right? Like going out and getting a will, going out and buying life insurance. I mean, culturally, we are not taught to be comfortable contemplating our own mortality. That's just a fact. We all know that, right? We've all put off things that we know are important because we don't like thinking about that. It's way more fun to go shopping or play around at golf, and that can wait till later, except sometimes later becomes never. And then in the meantime, something happens, and guess what? Someone's losing their house, right? So I think as a mortgage broker, you are the financial expert. People are relying on you for your financial expertise, and you do have an obligation to make sure you're looking out for your clients and their best interests. And really, in terms of best practices, I think that means getting insurance in place right away, and and encouraging them to go speak to a life insurance agent or a financial planner. I think that's great if they do, but just know that oftentimes that's not going to happen, or it's not going to happen quickly. But your north star should be not just putting clients into mortgages, but making sure those clients actually can stay in their homes no matter what happens, and that they'll be financially resilient to weather life's storms.
Right. And I think one of the points that I've always made was even though you were not in your house, but you remove conditions on your actual purchase of that house, your estate will be liable for this mortgage, right? So to complete that sale.
That's a
Yeah.
great point. And when you have two people on a purchase contract, and if you are relying on both of those people, and their income to close, then you absolutely need to have the coverage effective right away. Otherwise, it's a vulnerable situation, and it happened to me, so it's a terrible experience.
Again, lots of stories. One of the biggest ones I always remember is he had refinanced his house to help his girlfriend start a business. Unfortunately, he had an accident driving, and they had not taken the insurance because he was a little older and it was expensive. But regardless, the business should have paid for that coverage, right? So just so that there's no liability left, against the property if something did happen, and it did, unfortunately, right? So.
Yeah, I mean, I've always been of the mindset just to have all the insurance because I feel like it's Murphy's Law. If you don't have it, you're going to need it. So just get all the insurance. And then, hey, like I always laugh at Gary Morris because he always says, well, I love paying my insurance premiums. It means I'm still alive. And I think that's a great line. So true.
Yeah, so true. In his case, he probably needs lots of it. So. What else would you give as a pro tip to brokers and to customers? Actually, I guess when you think about it, that both sides of this need to hear this, I guess.
Yeah, I would say don't actively bias your clients. Like, even though you might have the best intentions or you might not know if this is a good product or not, or they're scared that it's not. Like, the life insurance industry really loves to come down hard on mortgage creditor insurance products. And I understand it because the life insurance industry is thinking bank insurance, right? And bank insurance is not portable. So that's why you get all these, negative conversations that happen around it. But with this particular product, MPP, it was designed exclusively for mortgage brokers, and that's why it's portable, so clients can take it with them. I've had lots of mortgage brokers who are also life licensed, who are also financial planners, and they sell the disability product all day long. So one of the really cool things about the product is that there's no financial underwriting involved. So if you go see a life insurance agent for a disability product, they have to financially underwrite you. So, Len Lane, if you make $250,000 a year because you're a rock star broker and you write your income down to $50,000 so you don't pay too much, taxes. Well, if you go to get a disability policy, it's not going to cover you for your true income and your true lifestyle because you wrote your income down to, 50,000 on line 150 of your tax return. So that's an issue, right? With the MPP product, there is no financial underwriting. So it doesn't matter how much you make. If you make $50,000 a year on your line 150, but you have a $10,000 mortgage payment, Manulife MPP is going to cover your mortgage payment, and they don't care about what your income is. So this makes it extremely and competitive and a really incredible product, and especially for self-employed individuals. Plus, it's a group product, so there's group savings. So if you talk to financial planners who are mortgage brokers or life insurance agents who are mortgage brokers, they will all tell you that they sell the disability product all day long. It's a really, really excellent product.
So talk about it being underwritten up front, because I think that's the part that most people, when you're dealing with the bank, it feels like they come back if something happens and try to figure out how to not pay you. So what difference does the underwriting up front make?
So there's a lot of misinformation about underwriting. What I will tell you is that all life insurance is governed by the same laws in Canada. So it doesn't matter, if you're getting a policy from a life insurance agent or even the bank or MPP, it's all governed by the same laws in Canada. And so the application is the first stage of the underwriting process, right? So clients can answer those questions. I've always said, when I've trained mortgage brokers, if a client isn't, sure how to answer a question, they can leave it blank. Manulife is going to contact them. But at the end of the day, if someone is answering yes to a medical question, there's going to be a tele-interview, and the insurance companies are going to do their due diligence to make sure that this is somebody that they can qualify for, standard regular life insurance. But I worked at Manulife for a decade, and the company, I would say, had a lot of heart when dealing with clients. They're not looking to not pay out claims, but they can't pay out fraudulent claims. So if you forget, for example, I'll do an example even on myself. I forgot to mention when I filled out my form, question number 3 had asked about, do you take medication or blah, blah, blah. And I had answered that no. But as it turned out, I was actually taking a topical medicated cream for rosacea at the time. Is basically when your skin gets red. If you eat spicy food or drink too much red wine, happens to us fair-haired friends. So anyways, I called the underwriter back like 6 months later and said, oh, by the way, I realized I probably should answer this question a yes, but I answered it a no. And the underwriter said, well, thank you for letting me know that, but we would have given you the same coverage that we gave you at the time, so everything's fine and it's no big deal. Okay, so insurance companies aren't looking to deny you for all these little tiny things. No, it has to be like a material misrepresentation. So for example, if I were to have a heart condition and be taking heart medication, and then I didn't disclose that and I died of a heart attack a year later, well, that's material, right? Like that's the sort of thing an insurance company is going to be like, I'm sorry, but this is a problem, right? And as you would expect, and you can't expect them to pay out, claims that like that, because that would just make premiums go up for everybody. And had they known that the truth about that situation at the time of application, they would not have given, the coverage out. So it's just kind of common sense type stuff. If someone's answering the medical questions, answer them thoroughly, honestly, accurately. And if you're not sure, then go through it with a Manulife representative, and they're happy to do that with the client.
We recently we had a client who received disability insurance because she was diagnosed with stage 3 cancer and had started chemo, right? So they actually covered her for that because she was unable to go to work, right? She wasn't able to do most things actually, but with chemo and everything, of course. So I thought that was quite surprising that they would consider that under the disability and not just a regular ailment sort of thing.
Yeah,
right?
I don't know, all kinds of illnesses and accidents, and yes, and in fact, mental stress related disorders. Mental stress. Are you stressed right now, Len? Do you need some time off work? But I mean, I'm not making a joke of it, but actually, and especially since COVID, mental stress related disorders are the number one reason why people are filing a disability claim. And it's just a fact of modern day life. People feel very overwhelmed, and rightfully so. You can't blame people, but that's the number one reason why people are going on a disability leave today.
Yeah, I don't have stress. I'm a carrier, evidently. So.
You're like the most calm guy I know. Like just calm.
Why get excited? So, I think it's probably been one of the best things. Like in all honesty, we left MPP twice.
What?
To another one that has an elephant, and I can't remember what the third one was. But we always end up back at MPP because we like the product. I've always thought it was fairly priced compared to what you would get anywhere else. I carried a disability insurance policy of my own for many, many years before I got too old and they wouldn't let me carry it anymore. But and I don't think I never claimed on it, of course. But compared to what I was paying for that, it is a lot less money to be on the disability program or to pay for the disability that would pay out your mortgage or pay your mortgage while you're injured or something, right? So it's I've always thought it was a good place to be for our clients, and it continues to be that as far as I can tell. So anything else you would add to what we should do better or clients should know? Or
I would just say keep an open mind. I think, unfortunately, brokers can get sort of swayed by others. It's like, oh, don't do this or don't do that without doing their own due diligence, without actually exploring and finding out for themselves. And so they just listen to the first thing they hear. If, for example, life insurance agents can't sell this product. So do you think that they like it, that mortgage brokers have access to a product that they can't even sell? Of course, they're going to say something bad about it because they don't want you selling it. They want you referring all the business to them. It would be no different if they were, if life insurance agents had access to a mortgage product that you didn't have access to. You wouldn't like it either. So just don't be like willing to accept the first thing you hear about something because it's oftentimes not true. Like find out for yourself, find out about the products for yourself and how everything works before you make a decision. Because otherwise, I mean, what I see so many times is just brokers actively biasing the clients away from taking MPP, a fully portable product, and then the client is walking into the bank or the solicitor's office, and they're getting signed up and locked down with a non-portable product, which is affecting the longevity of your business cycle. It's actually bad for the client, and the bank is making that extra money on it instead of you. So that's what I would say about that.
Yeah, and it's something that you can go back to the clients as well and say, did you actually do this? Like you said, checking back in 30 days later to see if they found insurance or not. The one thing that I've implemented into our CRM program is at the 10-month stage, instead of at the anniversary, sending out the letter again that you supplied, right? That, asking them, have you really taken life insurance? Are you taking this seriously? Are you really covered for disability? So it's constant for us, and we can get that coverage for people who aren't actually our clients as well, right?
That's a good point too, because the lenders all campaign your clients after funding if they didn't take the insurance. So they all do this, and Manulife has a lender channel as well. Again, non-portable products, and if the client doesn't take it, they are campaigning your clients after funding. So I really think it's important for mortgage brokers to be as good or not better, and then also do a 30-day check-in. Like, don't let the lender get that sale, right? Just because they're better at a business mindset than the broker is, right? Because a lot of the brokers are just like, go talk to somebody, but it's just never happening, and that client is getting scooped away from them, in that interim process there. So yes, I think that doing the 30-day check-in is really professional. It shows that you care about your clients, and ultimately, I would hope that every broker's North Star is not just to put a client into a mortgage, but also to make sure they can stay in their home. That really matters. And if you've gotten one of those phone calls where something has happened and someone's losing their house, you know how terrible that is. And it's awful to feel like, you're going to question, why didn't you do more? And why didn't you talk to them about it more deliberately and educate them better so that they're not in that situation?
Okay, I think I'll leave it there, Kyra. Thank you for your time today. It's a great product, and we're glad that we're still on MPP after all these years.
Me too. Yay! Thanks, Len Lane.
Thank you. Talk to you soon. Thanks for listening today. I hope you found the information that we provided to be useful in your mortgage journey. And remember, you can always find our associates at www.brokersforlife.ca/associates. Have a great day.